Hello, and welcome to another episode of The Trade Stylist, the place where we try and craft your trade. This is the week of 27th of April 2024, and we start with the disclaimers as usual. Know that these numbers and data might be wrong sometimes, and that there is a risk in any investment. So, hello, I am Debajyoti, better known as DJ. You can find me at TheTradeStylist, and I'm here to craft your trade. So we go first of all to the prayer. May the trading gods be with us always. We move to the market update. So let's look at how the markets have fared, and we start with the softs first, and we'll see more or less that finally cocoa seems to have lost a little bit of steam. Now the fact is that it has hit all-time highs over the past few months. But Robusta and Arabica are picking up, so maybe some money is shifting from cocoa to coffee, and we're going to look at that next week. Orange juice strongly up, almost 8% on the week, and so is cotton, but sugar lost quite a bit. In fact, it bounced up a bit at the end to close at this level, but it did hit quite a bit low. Moving on towards grains, and we look at that grains for the other side have been strongly positive. There's been risk off. And as I've been telling for the last couple of weeks, I was long on these trades, both on wheat as well as corn, and we're going to look at that at the next section and see how we're supposed to position it up when going ahead. Finally, yes, most of the softs complex still stays strongly positive. Sugar now has lost almost 30% compared to where it was last year. And then the grains complex wheat is slowly catching up to where it was. And I think we're going to see positive sort of YTD numbers basis next. Going to the tradecraft section, let's look at how the corn futures have fared, and we're seeing that the market has bounced as I was sort of expecting. This was a risk-off sentiment, and I strongly feel that maize might have a story of its own. It should not be only driven by wheat. If we look at the wheat futures, strongly positive, closed quite high. Good strong signal, and I think my long bet has paid off. So yeah, I'm gonna change the profit taking to a little below 600 and keep it at there and let this trade run. So we lock in a bit of money and then let it continue how it wants to go. And finally, sugar, as I said, it's hit almost 19.18. Settlement trades are slightly different, and yeah, it does look to be still going down further. Trade forecast possibly can go down to as low as 16, but we need to look at oil, we need to look at ethanol, and overall sugar S&D to sort of give us a better number. And now we look at trade speak, where we basically look at what is happening to wheat and maize, and what exactly did we forecast. So my bet was that looking at the way the crops were coming out in terms of maize, and I spoke about this in the last episode, that the Argentina's crop was revised downwards. Funnily enough, USDA did not make that much of a cut on the corn figures, and which is why the corn numbers and the corn prices have sort of stuck in that range. But I do think this is a real news coming out of Argentina. It's going to have an impact. Will it be offset by the excess stocks in US? Still a question. But basis as well as normal prices for corn are moving up in the last week or so. Wheat, on the other hand, is definitely a risk-off trade. I had forecast this looking at the Ukraine situation, and also the fact that there might be trade flow issues coming into Europe. It's a topic of major discussion where I'm coming back from the World Cocoa Conference, and I think that we might see some more positions on this where people sort of exit their risky shots and take this market a bit higher before we sort of see some, let's say, leveling happening now. Moving on, we look at trader peak, which are the points of interest for the week. And number one is the fact that bird flu risks are increasing across the US, so we need to be careful. There's been a cow-to-cow transmission of bird flu. Bad news in terms of global wine has dropped almost 27-year lows based on high prices. That's really hitting inflation. This is definitely a luxury product, so people are definitely giving up on it. The EU Parliament has approved a weaker regulations for farmers. This is sort of what we expected based on the farmer protests that were going on. It's a major vote bank. It's also a major decision maker today, and a lot of governments are afraid of sort of the farmers which have been their strong bases in the past, moving away from them. Further, EU lawmakers approved for the Ukraine deal extension, and I think a lot of people are not going to be happy on this. The logistics partners, the trade partners, probably especially the countries which are getting competition from Ukrainian grain, are not happy. But at the same time, I think it's required for the Ukrainian country to sort of still have a trade flow. Cocoa farming in Liberia is putting the entire EUDR law at risk. This is something that we speak about in the controversy section today. And then Ghana expects an agreement with lenders in May, which would enable it to sort of take loans and also pay back certain sum with a delayed coupon. And finally, post-Brexit, border controls for food across the UK start on April 30th, and there are expected to be some snarly woes on the supermarket shelves. Finally, reports this week: EU GDP growth, US Fed interest rate decision, big one, German inflation rate, and the US unemployment rate. Will the Fed cut interest rates? We don't know, which is why it becomes so much more important to look at it. Going forward, we look at controversy and we talk about Cocoa and EUDR. And as some of you probably know, I was recently in the just concluded Cocoa conference, organized with the ICCO. We are the panelist for AFEX on the exchange for Africa, and this has been something that is on the center stage for Cocoa right now. How do we make sure that the countries are compliant to this, and what is the real impact of the EUDR law? And I think that's what we pick up on this section today. So first of all, let's look at the net change in the global forest area. I mean, in the 1990s to the 2010s, if you look at it, more or less Asia and Europe did well, comparatively well in the 2000s. So some areas definitely gained forest reserve, but overall it has been a net loss. And we can see that the global numbers are definitely reducing, but it's not reducing at the pace at which it needs to be. So it is a major problem. And the segmentation of this problem is something that we'll look at in the next slide, which means most of the forest loss has been in the tropical areas. And that should be obvious because majority of the world's population lives within the tropics, and they grow food within the tropics. It is mostly driven, as we see, by commodities. And is cocoa one of these commodities which is leading to this deforestation? And is it that big a player is the question. And we can answer that in sort of the next graph. And if you look at it, well, almost all of the red areas are either in Southeast Asia, a little bit of Africa, and primarily in South America. And while West Africa as a whole still is in the, let's say, a slightly more dicey environment in terms of annual change in forest area, it is definitely South America and Southeast Asia which is contributing majorly to this deforestation law. So the concentration of this regulation, in fact, is definitely going to hit the South American countries harder probably, and the Southeast Asian countries harder than it is going to hit West Africa. So the other thing about West Africa is, while 60% of the production of cocoa does come from West Africa, the major cause of deforestation as a whole is timber and logging, not necessarily just cocoa. Cocoa is one of the cash crops, but not every land is suitable for cocoa, not every weather is suitable for cocoa. And typically it takes at least 1.5 to 2 years to start getting any income out of a cocoa tree, even with a hybrid cocoa tree. Most farmers who are doing this typically are planting something else which gives them seasonal crops, or they're basically just selling the wood, which is what timber and logging is all about. So I think it's probably more important as the entire continent to look at stopping illegal timber, stopping illegal logging industries, and comply with this. And South American nations, Brazil, Argentina, Chile, Peru, Colombia, they would have to definitely do a lot of hard work in terms of looking at how they can prove that their farms are within the sort of non-forested areas. And I think that's what this regulation should be looked at, and not really as a phytosanitary measure, which is what few of the participants feel that the market is going towards. And that's the difference. It's a commitment towards doing a greater good, and it's a commitment which the entire European Union is holding themselves to. The question which is still in my mind, the question that still stays is, will it be equivalently implemented or something similar be implemented across Asia as well as the US? And that's something that we have to watch for. So yeah, I hope you had an interesting session today. So next week we'll look at the market update, we'll look some more trade controversy, and then we look at some more trade craft. So let's trade some more. Hope you enjoyed this conversation as well. Please feel free to drop in any questions, comments that you have, and I hope to keep adding value to your weekend, and see you on the next episode on the 4th of May 2024. Thank you. Have a great weekend.